Oh, all right. India, Poland, Dallas, Texas, Northern California, Vancouver, Melbourne, Australia, Charlotte, North Carolina, Ontario, Vietnam, wow, Quebec, Vancouver, Johannesburg, Toronto, Malaysia, and the most exotic of all, Idaho. Wow. Oh, this one I can't even pronounce. Okotoks, Alberta, Manitoba, Singapore, Perth. Awesome. Linden, Utah. All right. Wow. Very exotic locations. I love it. Istanbul. Holy moly. Somerset, New Jersey. Uh, Iradry, Alberta. Airadry, Alberta. I have no idea. I have no idea. Yeah, exotic. Tampa, Florida. Another person from Quebec. We had several people from Quebec, actually. Pretty cool. Wow. All over the world. Well, thank you very much. That's just awesome. We'll get going here in 1 minute. 1 minute, we'll get going. All right, let's get going. Um, one of the, I've been getting very, very excited about the gold market, and we've already had a good move in the gold market, but I think that there's going to be plenty more. And it's not that every factor is bullish gold. Of course, there's always um, um, there's always something going to stop this from happening. I mean, there's always going to be something where where there's going to be negative effects. But generally speaking, I think we're in a situation right now where the gold market is primed to have a very, very significant rally. And that's why I wanted to do this webinar, because I felt that we could really, I wanted to share with you what I'm seeing in this marketplace. And I think it would be pretty interesting what's going on here. All right. So let's dive right in here and let's get right into it. So one of the biggest and most important reasons why I'm bullish on this market is this chart right here. And let me explain what it is. You can see a lot of squiggly stuff. But if you look, you'll see a dark black line. And the dark black line is the normal seasonality that we see with gold. And here we see, here's the beginning of January right here, and then we go all the way to the end of January, go to the end of December. Well, guess what? We're right here. And as you can see, the seasonality is spectacular for the gold market, and we should expect an extremely strong bull market from the beginning of August all the way up here to maybe the beginning of October, so maybe a 2-month rally. And I went back and studied this, and the market has rallied over 90% of the time in August and over 80% of the time in September. So when you combine the two of them, we're about an 85% chance that the market's going to rally strongly. Now, this could be one of those 15% where it didn't. I don't think it worked last year, if I remember, but we've got the odds in our favor. And something that's worked 85% of the time over the last 30 years gives me a lot of confidence. Of course, it doesn't have to happen this time, but boy, this is one of the strongest seasonalities there is anywhere in the world. And so I'm very excited. This is one of the biggest, most bullish reasons why I'm excited. Now, I'm going to start now with the fundamentals. And I'm going to start from the broadest and biggest and most important fundamentals, and then we're going to go into some different sections, and then I'm going to go through some technical analysis. And at the end, I'm going to show you what my scenario is, which is pretty simple. and I'm going to show you a trading plan. So no matter what your style is, I've probably got a trade for you. I've got about 8 or I don't even know, but like 8 different trades for different type of people. So we're going to start with big fundamentals and work our way down to specific trades. And most of those trades I'm going to do myself. All right. So what this is this is monetary base. And what it does is it gives us a very clear idea of what the Fed is doing. So back here in 2008, the Fed eased massively, and then you see that they've been, tightening, easing, tightening, easing. They were tightening recently, and now they're starting to ease. And of course, what that means is when they ease monetary policy, that is bullish for gold. So we got to start out here, because when they're bullish, that causes higher inflation. It causes lower interest rates. And so there's a whole series of things, all of which are bullish for gold. Let's take a look right here. This shows what's called the break-even inflation rate. And one of the things is, in other words, if you buy a 5-year Treasury note, what does the inflation have to be? Well, the market believes that inflation is actually going down. Very interesting. Now, this is one of my super tricky indicators that nobody follows but me, but you can see that there's a very high correlation between these two things. Well, down here is the price of gold, and you can see we're in a little bit of a bull market right here. Well, what is the green chart? The green chart is the chart of what is called the TIP. And the TIP is Treasury Inflation Protected. It's a Treasury note that factors in inflation. So as the TIP goes up, gold goes up. So this, as you can see, is highly, highly correlated with the price of gold, and it's in a bull market, and this is one of the key fundamental factors of why I am bullish on gold, is because the TIP is going up. And the TIP combines interest rates and inflation. So it's a great single indicator. But I've got more tricky indicators. This is one that nobody looks at. You're seeing this for the first time ever. Okay, this is something that every single week in my Tradesmith newsletter, I present this. So what are these indicators? Obviously, the gold mountain chart down here is the price of gold. Well, let me start up at the top. This blue line is the price of the euro, the foreign exchange, the euro. And you can see that it's in a consistent bull market, and that's going to be bullish for gold. I'll explain why in a minute or two. This is the CRB. Now, the CRB is an index of commodities, so copper, soybeans, cocoa, coffee, etc., etc. So when the CRB index is going up, that's a leading indicator of inflation. You can see that it's been going up recently as well over the last 6 weeks. So that's bullish for gold. And then look at this green indicator here. This is almost 100% correlated with the price of gold. What's that? That's the Japanese yen. And you can see that the Japanese yen has been in a big bull market here, and it's telling us that the price of gold is going up. So here we have the TIP is bullish, the euro is bullish, the CRB is bullish, and the yen is bullish. These are all deep fundamental reasons for believing that gold is going to continue to move higher. Now, one of my favorite indicators, once again, you've probably never seen this before, the chart itself is gold, and then there's a black line on here. Now, I showed you that the yen was extremely highly correlated with the price of gold. This line right here is the Indian rupee. And as you can see, the Indian rupee is also possibly even a leading indicator of the price of gold. Now, why? Why in the world would the Indian rupee have such a high correlation and maybe even be a leading indicator of the price of gold? And by the way, why is the price of gold skyrocketing in August and September? Well, they're related. Do you know that half of the world's consumption of gold every single year is for the Indian wedding season in the fall, specifically October? And so what happens is that there's this massive increase in the demand for gold. Like 50% of the demand for gold is all jammed into a very short period of time, and it's related to the Indian wedding season in the fall. And so all this demand for gold, 50% of the annual, we keep thinking, ETFs and jewelry and industrial. No, it's gold for Indian weddings. That's half of the demand for gold. And that's why there's this incredible increase in demand. The gold is demanded in August and September and then sold in October. And as a result, we see tremendous amount of increase. And that's why the seasonality is so strong. So this is showing us also the Indian rupee is very strong. Well, why would that affect the price of gold? Well, it affects the price of gold because if the Indian rupee goes up in value, it makes the price of gold cheaper for Indians, and therefore they demand more. So a strong Indian rupee is a leading indicator, a little bit leading indicator for the price of gold. Very critical. Now, another big demander of gold are ETFs. There's an ETF called GLD, and all it does is own gold, hence the name. And you can see that in 2016 there was a big increase in demand for ETFs, then it came down. It's kind of creeping up, so I'm counting this as kind of a neutral impact on the price of gold, not a big positive or negative at this point. Now, interest rates have a big impact as well on the price of gold, because you see, if you own gold, if you're a professional trader like myself, you have to assume that you're going to pay interest to hold the gold. You definitely have to pay storage and insurance. I mean, if you take it home, you don't have to. But if you are taking large quantities of gold, like a futures contract taking delivery, then you're going to pay storage and insurance, which is not a lot of money, but you're going to have to pay interest on the money. So the lower interest rates are, the better things are. And this chart shows that that at extremes you want low interest rates, and particularly you want low real interest rates. Well, what are real interest rates? Real interest rates are interest rates minus the level of inflation. So right now we've got, you know, basically if it's short-term interest rates like 3 months, it's like 1/4%, but inflation's at 2%, or let's even say 1.25%. That means that interest rates, real interest rates, are negative. They're negative, and that is bullish. All bull markets in gold occur with negative interest rates. That's one of the most critical factors affecting the price of gold, and we've got it now. Now, this is kind of giving you a good idea of this as well. You can start to see this correlation is unbelievable. Now, these are inverse correlated, right? They're opposite to each other. So when one's going down, the other's going up. That one goes down, this one goes up. Well, this green line is the 10-year Treasury interest rate. And, of course, the gold line is the price of gold. So as interest rates come down, that is bullish for gold. All right, and you can see if interest rates go up like they did here, well, we got a major bear market in gold. Now, the best thing would be to have Treasury notes subtracting interest rates, but this gives a good idea. Deducting inflation. Of course, inflation doesn't move very rapidly. So let's take some other factors. What we're seeing right now is that CapEx, that's capital expenditures. What we're seeing is that gold miners are reducing the amount of money that they are putting into capital expenditures. And capital expenditures are how we get increased production of gold. So they've started to move up a little bit, but you know, everything is with a lag. So you know, we're kind of living off of what happened back here when gold mining companies just simply were not exploring for new gold. Gold miner reserves have gone down. We're now back to where we were in 2003 and 2004. So they don't have a lot of supply to sell. Also bullish. Gold discoveries, maybe this is not so impressive, but one of the reasons we have lower capital expenditures is because we don't have a lot of new mines. We're just mining the old ones. Now we're getting better at mining the old ones, but nonetheless, we're not seeing a lot of new mines come to market. Now, this is a very interesting chart, so let me break it down for you. This chart here in the middle, this is the price of that ETF I mentioned, GLD. So this is basically the price of gold. Down here, This is an ETF, GDX, and GDX is an ETF which represents large gold mining companies. Now, the reason I'm looking at this is because I want to know, do I want to be in gold or do I want to be in gold miners? Well, we can go up to the top, and this is the ratio between the two of them. GDX divided by GLD. You can see it's been pretty stable. Neither gold nor gold miners have really outperformed. So I'd say let's be neutral right now, and we could think in both ways. Let's take a look over here. This is GDX, but I want to show it to you for a reason. This is the large gold miners. Down here, this shows the bullish percentage. This shows the sentiment of the market, and you can see that we're only at about 25% of newsletter writers are bullish, whereas back over here we were at almost, well, we were at 100% of the surveyed newsletter writers were bullish right here. Now, why that is important is that I love to be in bull markets when this number is very low. And the simple reason is because it means there's lots of people left to buy. You see, when everybody is bullish, there's nobody left to buy gold. So I like it when it's low, because that means that all these people that are bearish on gold, neutral on gold, they're going to have to buy as the price moves up. And of course, their buying will cause the price to go up more, which will cause them to buy more, which will cause the price to go up more, which will cause them to buy more. And then the top is when they panic. And, well, we'll follow this number until it gets up around 80, 90. I'm not too concerned about it. Now, this is another way of looking at the marketplace as well. So the chart is GDX. Well, what is the red line? Well, GDX is an index of gold companies. And the red line is it tells you what is the advanced decline percentage. So in other words, what percentage of the stocks are going up and what percentages are going down? Well, you can see that what happens is when the red line is above the price action, that's generally a bullish thing. When it's below the price action, that's generally bearish. Well, as you can see here, we're in a generally bullish mode. Most of the stocks are going up, and that breadth of the market is leading the market higher. So this is something that's giving me a lot of comfort. And it also means that the average gold mining company is going to do well. It won't just be a few big cap stocks like American Barrick or Newmont or Anglo American, whatever. It's going to be a lot of different gold stocks are going to be in a bull market. So that's always a good sign. Now, this comes to one of the things that I really, this is going to be one of my recommendations later, but I want to show you this chart because it's very important. This is an ETF called the Central Fund of Canada, and the ticker symbol is CEF. And this is a chart of it up here. Well, what is all this red down here? Well, see, the CEF only holds gold. So it's just the same as GLD, except that it's not an open-ended ETF. It's what's called a closed-end fund. And when you have an ETF like GLD, it has to trade for the value of the gold in the fund. But a closed-end fund is an unusual situation. It can trade for any price. Well, what this means is that this is actually, it's trading for less than the value of the gold in the account. So in effect, right now, we're at about a 7% discount, which means that you're buying $100 worth of gold for $93. So you're getting a discount. Well, if I took this chart back far enough, I took it back another year or so, it was at a 15% premium. And if this bull market gets to be a big, big bull market, we could see this go back to a premium. So let's say it goes to a 3% premium. That means that it will go up 10% more than the price of gold. Let's take a look right here. Gold moved from here at the end of 2015. It had a pretty big bull market, and the discount went from basically 12% up to something like 2%. So during this period of time, this outperformed gold by 10%. So this is one of my tricky ways of trading the gold market. So I would never buy GLD, because I can buy GLD at a 7% discount by buying CEF. Now, I'm going to come back to CEF later because this is going to be one of my recommendations. But I wanted to explain this to you so you understand why I'm talking about something that hardly anybody talks about, CEF. Everybody talks about GLD. I talk about CEF. Okay. Now, another thing that we need to look at when we look at our perspective is, you know, we always think of gold is basically traded in US dollars. And the price in US dollars is this green line right here, up here. It's the one that is the strongest. But you have to realize is that, well, what if, for example, you are Canadian? Well, that's this black line down here. So Canadians, they're looking at this and they're saying, gold's cheap. It's still in a bear market, in fact, whereas we're kind of saying it's in a bull market. They're saying, well, it's in a mini bull, but they're saying gold's cheap. What about down here? These are Europeans. This is the gold in euros. Gold is really, really cheap for them. The orange line up here is the price of gold in yen, and then the red line is in British pounds. So one of the things I do is I always want to know, what are the pressures on people around the world as they look at this? And right now, most people in the world who have a lot of money are thinking gold is cheap. It's cheap. All right, let's get down to the technicals. I think, as you see, I don't need to do a big wrap up, but all the factors that we've been looking at are extremely bullish, extremely bullish. And the seasonality is telling us that the time to buy is now. So now what we need to do, though, is we need to see, just because the fundamentals are bullish, I need to know that the price action is bullish. I can't just go buy something because the fundamentals are bullish, because the price could go down even more and I could be bankrupt before the fundamentals actually change the price action. So I want a fundamental story that's strong. We've got that. We've got a sentiment story that's strong. Okay, we got that, check. We've got a seasonal story that's bullish, check. Now let's take a look at the fundamentals. So here's the price of gold. Each bar, this is going back to 2009, each bar is a monthly bar. And you can see that we may be forming a gigantic pennant formation. Now, I'm not counting it as a pennant formation because under the rules that we teach in our holistic trading course, volume has to be going down as we go through the formation, and I would say it's flat. So it's not a perfect pennant formation. So I'm just kind of showing you it's not that useful. But what if we go to the weekly chart? Well, here you can see exactly the same pennant formation, except you can see that the volume is also pretty flat, but a little bit lower. It's going a little bit better. If we go to the daily chart, then over here, clearly the volume is less than it was over in April and May. So here we're finally getting some confirmation that maybe this pennant formation is a legitimate one. But the key is, hey, look where we are. We're about to break the downtrend line. We're not that far away from this high. So if I look at this purely from a technical perspective, I would expect it to break this line. I would expect it to trade up to 1,300, this high and this high. I would expect it to sell off maybe $20 and then go right back up again and break through this $1,300 area. So we're basically at 1270 right now. So I'm looking for, let's call it a $25 rally at this point. Probably some consolidation once we get up towards 1,300 and then a breakthrough above that. Okay, so what's my scenario? Well, there's going to be dips. Obviously, markets don't go in one direction all the time, but gold will rally through August and perhaps beyond, probably till the end of September. Now, next week, I'm going to do a webinar, and I'm going to talk about the stock market, and it's not a pretty picture. It's going to be a bearish report for you next week. please, I'm sending you emails. I would highly recommend that you sign up for that webinar. It's free also. But I'm looking at this and I'm saying, this is fantastic, because there's an old trading saying that there's always a bull market in something somewhere. So as the stock market is going down, I think gold stocks and gold will be going up. So we could be making money on the short side in stocks. We could be making money on the long side in gold stocks. And gold stocks tend to be negatively correlated with industrial stocks. So this scenario is starting to work out perfectly. All of the pieces are fitting together. Okay, now how can we make some money from this? I've got a number of trade plans, so let's go through them. And I'm going to tell you who I think they might be for, but here's the thing. I can't tell you if you should buy any of these or do any of these, because the reality is I don't know what your situation is. I don't know how risk averse you are. I don't know how risky you are. I don't know what you're trying to achieve with your money. And so I can't really say that any of these are recommendations. They're not recommendations. These are ideas that you should do your independent research on and then make the decision if they're appropriate for you. And furthermore, if you've got the money, that if they all work out terribly, you don't care if you lose the money. All right, so that's my caveat there. But it's an honest felt, and it's an intellectually honest one as well. So these are the things, though, that I'm looking at to do in my account, okay? So you're looking over my shoulder. So it's not a recommendation, but I'm going to tell you why I'm going to do this trade. All right, I already told you about CEF being able to buy gold at a 7% discount. So that gets me pretty excited. A second thing, look at that purple line. We call that the purple predictor. It's the on-balance volume. And when it's above the stock price, that's usually a very bullish sign. And in this case, it's highly above the price action, so it's a highly bullish factor. And then my top green arrow is pointing at the 55-day high. Students of mine, you know, I use the 55-day channel to buy. So I'm looking at this right here, and I don't know that I'm going to buy on Monday, but I'm definitely buying if it breaks through that 55-day high. Okay, so I probably want to get in sooner if I can get a good entry point, because I want to capture a lot of that 7% discount going back to, say, par to even, because that'll give me an extra boost in my trading. Now, the options in this are not any good, so you can't really trade options. This is probably, for me, going to be one of my core stock positions. So something not as speculative, not as wild and crazy. I'm not trying to make $1 million, but this will be something where I've got that extra 7% booster profit from it going from a discount to, say, even just back to even. So CEF looks awesome to me. Now, gold itself, you know, maybe you're a futures trader, maybe you're a cash market gold trader, but same kind of a situation, except maybe even more bullish than CEF. Look at the on-balance volume. The purple predictor has just taken off and is really leading this gold market higher. So I'm going to trade this pretty much the same way. Definitely, if it breaks through the 55-day high, I'm going to get long gold, just either cash market gold or gold futures. FNV, let's get into some specific stocks. Now, this is a real conservative play. You can see that FNV, Franco-Nevada, has been in a sluggish bull market all this time. All this time. Do you see what I'm saying? And the reason is because it's what's called a royalty company. So it's loosely related to the price of gold, but it really just takes a kind of a slice of the pie. No matter what the price of gold does, it takes a slice of the pie. So this is my conservative play. Not going to make as much money as some of the other ones, but definitely is going to be my solid, slow-moving, but even if gold goes down, I think I'll still end up making money in this one. Let's see, question, let's see if I can go back. Hang on. Well, one second here, 1 second. All right. Yeah, now in this case, yeah, the purple predictor was quite bullish. Now it's just average at this point, so it's not helping us out here. If you're trading GOLD, which was the previous chart, you could trade options on GLD. Very, very liquid, very good, fantastic. Franco-Nevada, not really an options play there. Ralph asked the question, is there a holistic entry point on CEF? I think we're going to have to wait for the next dip before we find one of those. Okay, ABX, huge, huge company. Gosh, it may even be the largest gold company for all I know right now, but it's anyway one of the top 2 or 3. Notice that it was in a pretty significant bear market, but it's moved to a bull market right now. And furthermore, look at the purple predictor is insanely bullish. So as my super large cap gold play, I'm going to do options here on ABX. You know, we just made new highs, so I almost feel like I could buy this, you know, tomorrow kind of thing. I'm a little bit late because of the timing of this webinar, but it looks pretty good to me. Looks pretty good to me. Chris is asking, do I like Nugget? NUGT. NUGT is a levered ETF on GLD. I would prefer to trade the options rather than Nugget, but there's pretty good options on Nugget too if you really want to turbocharge your trading. So Nugget, if I remember, is a 2 times ETF, so that means if the price of gold goes up $1, it goes up $2. And then you get an option on that, so you can really leverage yourself up by doing options on Nugget. So for speculative people, sounds pretty good to me. Sounds pretty good to me. In terms of the options on all of these, I would go out to January's of next year, you know, like a 6-month out option. That would be where I would be focusing on for sure, because I intend to be in this trade for at least 2 months. Hopefully longer, hopefully longer. All right, now, GDXJ also, we're not too late to get in on this. GDXJ is junior miners. Now, I mentioned before GDX. GDX is big cap gold mining companies like American Barracks, ABX. This is teeny tiny companies, junior miners they're called. And usually, junior miners are much more volatile, which means that we can make much more money than investing in the big cap ABXs or GDXs. This thing can really skyrocket a lot. Purple predictor is bullish. Worst case scenario, I'll buy a break of 35. That's the 55-day channel. But I think this is one that I'm going to buy tomorrow. And the options liquidity is pretty good, so I'm probably fine like that. And so this one looks very good to me as well. Put in a bottom back here. I like it because it's more speculative than the ABX trade that I'm going to do, or GDX. All right, so that's what I've got you. Options expiration, yeah, January's is what I'd be looking at. That's really where I want to go. So what we've got is we've got a scenario where pretty much all the factors are kicking in on the bull side. And we've got some good trades there, a mix of trades of options and conservative ones like Franco-Nevada, FNV, to speculative ones and you know, all sorts of things like that. So to me, that's very, very good. Now, what I want to do is I want to take some questions, but while you're putting in the questions, of course, now we go to the commercial part of this. So let me tell you about Tradesmith. Now, I'm going to give you a little pitch here, but I'll keep it short. And then put your questions in, and I will come back and answer the questions in a minute. The reason I want to tell you about Tradesmith is that I think this is going to be one of the biggest plays of the year. And I think it's going to be one of the biggest plays of the year where we can make the most amount of money in the shortest period of time. So that's why I'm having this special webinar, because it's very rare when you see so many factors lining up in the same direction. Well, the place that I'm going to update this, and I started this today, is in my weekly video newsletter called Tradesmith. And this newsletter comes out, it's a video newsletter, it's about 20-minute video, comes out on Monday, and you can then, I'm going to put all these trades that I just talked about, but I'm going to give the exact entries, the exact exits. I'm going to follow this story to protect you in case it starts to go south and so on and so forth. Now, I used to write the #1 stock newsletter in the world, Wall Street Winners. For 5 years, I won that award, most profitable newsletter ever. I also managed the #1 mutual fund, and part of my career was managing the Natural Resources Fund, so did that as well. I haven't had a losing year in 45 years, and I don't intend to start in August. Now, in this publication, I cover the U.S. stock market, global stock markets, foreign exchange, futures, bonds, of course gold, and I do have, if options are available, then I do use options as well, because I want to make more money with less risk. It's totally unique analysis. As you see, there's a number of super tricky indicators that I showed you in this presentation. So I use a deep fundamental analysis, unique technical analysis, and then I combine that with ninja trading tactics. But it's analysis you're not going to see anyplace else. I mean, everybody else goes through the same old blah, blah, and guess what? They don't have #1 newsletters. They don't have #1 mutual funds. I hate to say it, but they're losers because they've never actually done the deep fundamental analysis. So this is what you get when you get this newsletter. Key benefits, killer analysis that you've never seen anyplace else. Killer trades. We've been crushing it. It's to the point. I don't waste time. I'm not here to give you a long dissertation. I'm here to make you money. So it's actionable. It's easy. I give you the exact orders to put in. It's $47 per month, so it's a peanut for what you're getting. Free bonuses. I'm not going to spend a lot of time on this, but this is insane. This is for new subscribers only. We have a course called, oops, I went too far. See how that works? From option beginner to pro in just 4 nights, an amazing intro course. This one, I love this. Quickly and easily master the top 20 technical indicators. Very useful. Our original Retire Rich with 10 times the income is a great course on things like covered call writing. I love this course. Now this one is more advanced. The secret is out with gamma trading. Gamma trading is a sophisticated way of trading options, which virtually nobody in the retail sector uses. Of course, I use it and have used it for 30, 35 years, but this is more of an advanced course, which is fantastic. Now this course, I love this course. Master a profitable new option strategy each month. We got 2 options gurus to put together a series of videos, and each month they go through different strategies. And so some of them are, you know, like covered call, which you might have already heard of, but some of them are, you know, condors and iron condors and more sophisticated stuff. If you're interested in candlesticks, we've got a great course here, Master Candlestick Secrets. It comes with an 82-page manual. I love the fact that it comes with flashcards. Then FX options trading. This is something that nobody does, but which everybody should be looking at. All of these courses, if you go to Options University and bought them, they'd cost you $2,200, just about $2,200. But you get them free when you subscribe. So you come up with $47, you immediately get over $2,100 worth of education. So what you're going to get, very briefly, weekly video briefing with actionable advice, 7 valuable bonuses worth over $2 grand, 30-day money-back guarantee, and all of this is for just $1.56 per day. And by the way, for $1.56, you could buy a ½ pound of Tootsie Rolls. So what you need to do is you need to sit there and say, would I rather have a ½ pound of Tootsie Rolls, or would I rather have all this great stuff and hopefully make millions of dollars, right? That's it, ½ pound of Tootsie Rolls, giving you diabetes and tooth decay, or great trade advice. It's your choice. It's your choice. All right, how can you subscribe? It's easy. Go to bit.ly/weekly market forecast. The W has to be capitalized, the M has to be capitalized, and the F has to be capitalized. But once you do that, you'll get all those bonuses, and you'll be able, and the main thing is you'll be able to follow my whole gold campaign. And that's really what the whole story is here. It's a campaign. And we're going to be getting in. We might get out, and then we might get back in, and we might move towards more conservative. We might move more towards more options things. But I'm going to be using those ninja trading tactics all the way through this campaign. So please sign up, bit.ly/weekly market forecast. You're going to really enjoy it. All right, enough of the pitch. I hope you enjoyed it. I hope you subscribe. I know you're going to enjoy that. All right. And by the way, the free version is 5-star rated on iTunes. And they don't even get the trade recommendation, and it's 5-star. So pretty cool. All right. JG asked the question, what about platinum? I'm not playing platinum. Gold is going to outperform platinum right now. Platinum's strong seasonality is in December, so I may come out with another one of these. I'll take a look at the situation, the fundamental technical situation in platinum in November. But right now, we're going to see gold gain on platinum, so I would prefer not. Karun says, how about using an option strangle? Absolutely not. Not use a strangle. I'm bullish, which means I do not want a hedged transaction. I want to buy calls, if that's the correct. What level risk would you use? Jill asks. Jill, that's a question for you to answer. You see, I can't ask. I can only tell you what I do, and I'm going to put 1% risk in every one of these trades, but I'm going to put on a lot of trades. The level of risk is really up to you and your own personal financial situation and desires and risk tolerance and things like that. I can only tell you what I'm going to do, which is I'll take a 1% risk in each one of these. Kamal says, U.S. interest rates are going up. How is that factored in? That's not, interest rates are going up, but real interest rates really aren't. And it's real interest rates that are the critical thing. So as we see interest rates go up, we're also seeing inflation go up, and so that's making it so that the rising interest rates is really not that important. Dr. Sordine says, how about AUY? That's Yamana Gold, AUY. I looked at it, and I think I liked other ones better this time around. Last time we did one of these on gold, of course, we made really, I don't know, a huge amount of money on AUY, but I didn't like it as much this time around, but it was kind of on my B team of stocks that I would consider buying, but I ended up not doing. Can you use the Stock Success School trading techniques? Yes, you can. Use the 55-day channel breakout. Use the trend analysis. We also have a Stock Success School coming up in just a month or so. You should take a look at that. If you haven't taken that course, I would highly recommend that as well. But yes, we can use that. Oh, yeah, so I did mention AU in Tradesmith. I started the campaign in Tradesmith this last Sunday. I didn't mention it here. Now, this is a simpler situation. Will the silver market do the same as gold? No. I'm focusing on gold for a reason. Silver and platinum will lag behind gold at this point. How about dust? You know, DUST, isn't that an inverse? My memory is that that's an inverse, like it's a bearish one. Anyway, I only want to take bullish ones. Let's see. 1 second here. Well, Jill, I don't know. Jill says, I bought gold ETFs last year the same time of the year and did not make money. Oh, so as I mentioned, last year the seasonality didn't work. What can I say? It doesn't work every year, but that was the first time in a long, long time. I'm looking in Trader's Apprentice program. Are you looking at joining that? If you are, call your student advisor, call me. That is an otherworldly thing. All right. What do you think about KGC, AUY, NG, some cheaper stocks? Will you buy these futures at market or wait until a channel breakout or a pullback? All right. So I don't know anything about KGC. I've already talked about AUY. NG, I'm trying to remember what that one is. So as I say, we'll be looking more specifics in Tradesmith. Yes, I will be buying December futures, but I'm gonna if we hit the channel breakout first, I'll do that. But I think we're going to see a setback this week, and then I'm going to use the breakout from the setback to get into the futures market. Do you have some specific strike prices for those of us who want to enter the market this week instead of waiting for next Monday's Tradesmith video? I used the 30 delta. Pretty much always I use the 30 delta. So I would be looking at January options with a 30 delta right now. Yeah, I think I already answered that one. Okay. Okay, Francis, thank you so much. Love tonight. Love Tradesmith. Well, good, Fran. I know if you're doing the trades, you're making a lot of money. Um, I've been trading SIG to the downside. Do you think jewelry is going to change direction? Gosh, I was short SIG a year or so ago. And if I remember, I don't know if I made any money on it or not. I know I didn't make a lot of money, that's for sure. I'm going to have to pass on that one, Francisco. I think that with the economy generally coming back, we should see jewelers start to do better. I'll see if I can come back to that one, Pavlin. Sorry. Okay, answered that one. Andy, talk to your student advisor. They can help you. Oh, here we go. Pavlin says Tradesmith investment is even lower, less than an espresso a day by subscribing for a full year. That is actually true. We do have a full year price that does discount it. No, the free bonuses, you got a bunch of free bonuses, Sam, when you signed up. This group is for only new subscribers. Are you going to use any of the fundamental factors to get out of some of your trades that you are not getting in on a technical indicator like channel breakout? Generally speaking, I don't time trades based on fundamentals for the simple reason that they're slow moving. So generally speaking, I mean, unless something really big happens, which is very rare, the technicals will get me out way sooner than the fundamentals. And as a general principle, technicals lead fundamentals. All right, I'll try to come back to those, Johan. Okay, yeah, got it. I always, as I mentioned before, I like 30 delta, so that would be out of the money options. Do I have an overall stop loss level for the entire trade setup? Well, if gold starts to break lower lows and lower highs, I'll get out. I don't fight the market ever. Can I follow the strategy as I am based out of India? There are restrictions on trading. Is there a way out? Well, actually, no, there are no restrictions on trading, Arun. There's a lot of people in India who believe that, but it's not true. You can send money out of the country and open an account in Hong Kong or the United States. You just have to go to a state-owned bank and fill out a simple form, and you can send money out of the country. But of course, you can trade gold on the futures market there in India as well. So there's two different ways to do it. Move money offshore, which is not a bad thing to do, and then trade the gold futures in India. So not a problem at all. Andy, check for the bonuses. Check with your student advisor. So Brenda asked, what do you look at to decide which individual gold stocks to buy? Or do you prefer to buy GDX? Well, if you have a small budget, I would just look at GDX and GDXJ. If you've got a larger budget, and it doesn't have to be very much money, a few $1,000s, you can buy the individual stocks. And the first thing I look at is I want to see how much, if I'm looking at the big cap stocks like a Newmont or GG or ABX, which I mentioned, they're just going to be very highly correlated with gold. They'll probably go up a little bit more than the price of gold. They'll come down a little bit more than the price of gold. So they're kind of a leveraged play on it, let's put it that way. So what I'm looking at is that, but what if it's a small cap company? What if it's a junior miner? I want to see what their financials are. I want to know that the company is going to survive, which most of them will, except for the real junior ones. If they're producing gold, I'm pretty sure they're going to survive. If they're still an exploration company, maybe not. So, but then what I start to look at is I start to see what's the business model. What is their leverage to the price of gold? Because see, if gold goes up 10%, that might actually double the profitability of a junior miner. because they're so highly leveraged that a small change in the price of gold can mean a big change in their profitability. So that's a big factor that I look at, is that kind of leverage. But when I say business model, I love the royalty companies. I included one in this presentation called Franco-Nevada. And there's several more of them, but I love that model because it's kind of loosely correlated with gold, but they should just make money every year no matter what happens. Shane asks, what is your time frame for putting your trades on? Have you ever put them on? If not, what will be your trigger? I did put some on today, and generally speaking, I'm trying to get into these trades this week. If not, I'm looking for a dip in the market, and I'll get in after the rally up. Sharon says, have you switched from RSI 2 to RSI 14 in evaluating stock entries? For position trades, I use RSI 14. For swing trades, I use RSI 2. Yeah, option calls, delta of 30 to 40, something like that is good. Lester asked the question, if you are hedging an existing portfolio, for every $1 in the portfolio in stock and options trades, how much would you put into these gold trades? I'm not going to use these gold trades as a hedge to my stock positions, but they are a hedge. They're just kind of a loose hedge. That's why I'd rather use a direct hedge. So, you know, like there's an ETF called SDS, or buy a put on the SPY or something like that. Yeah, I'm not interested in dust because, yeah, somebody's confirming it is an inverse. Generally speaking, I'm going to prefer GDX over GLD. Once again, the extras are for new subscribers, not for existing subscribers. When you subscribe, you got a whole pile of bonuses as well. This is just a different one. What is the stop loss for CEF and FNV? Well, I don't have one there. I'm not giving specific recommendations here. It's kind of not supposed to do that. Yeah, GDXJ options, Todd says, look good. Isn't that right? Tight bid and ask, and good open interest. Yeah, I think there's good options for GDXJ. What percentage of the overall portfolio would you suggest? Well, once again, Rajan, this is up to you. It's not up to me. Because once again, it's a personal finance question. Every person on this call, all hundreds of you, you'll have a different answer, you know, because of your risk tolerance and how much you're paying attention to the market, what you're trying to achieve. You know, if you're a younger person, you probably take more risk than an older person. So I can't give what percentage. That's really, you have to figure that out for yourself. Please refresh my memory of pyramiding. Do you want 5 trading days between the 55-day breakthroughs? Yeah, the 5-day condition, it's called. If I were to use, okay, see, here's another one, Jill. If I were to use a 1% risk and I want to buy CEF and GDXJ, would I use the 1% for each of them or split and buy using 0.5 for each? Once again, see, I can't answer that question. Intellectually, it would be dishonest for me to tell you what to do. It's up to you. How much risk do you want to take? I'd have to interview you before I could give you good advice for that. Well, here's an interesting point. Tushar says last year on November 7th, there was demonetization of 2 of the largest currency bills happened in India last year, along with a lot of restrictions in gold import. First time in Indian history, sorry. That could be a reason for last year's non-seasonal movement. That's actually a very, very good theory, because there was, I mean, the demonetization was a shock, but some of the other things was not a shock. And they did raise taxes on gold imports as well. Just before that. So that could have reduced the demand from India just as we were going into a normally seasonally bullish. What's the definition of a position trade versus a swing trade? Well, a swing trade you want to hold from basically 1 to 5 days, and a position trade is you want to hold it hopefully forever. But weeks and months would be a position trade. Lisa, as I say, I can't answer a question of how much you would recommend investing because I don't know your personal situation, and that's a personal finance question. FNV will have earnings soon. How about using a covered call? I haven't looked at the implied volatility. If the implied volatility is high, then that sounds like a good strategy. What are your pyramiding rules on options? Well, that's a great question. There was a couple of times where I said, I'm going to buy if it breaks this high. I'm going to definitely buy if it breaks the 55-day high. I'm going to pyramid at all of those points because for me personally, I expect to make a lot of money. I want to be very aggressive, but that's for me. That's not necessarily for you. If we are an extreme trader and did extreme trading, should we use the Kelly weighting? Yes, you should. Right. Okay, so let me try to go back. There's a couple of questions. I'm going to get out of my presentation here. Well, here's the thing. Pavlin's asking about how can we trade the futures. I would use the normal rules, the TA, the CB, and all that sort of stuff. That's exactly how I would trade that. All right, any other questions here? All right, listen, thanks very much, everybody. I'm glad you could come here. We had hundreds of people on this call, and I hope this is an opportunity that we can make a tremendous amount of money, all of us, and if we don't make a tremendous amount, then I hope we make a modest amount or a moderate amount or whatever. So anyway, think about subscribing to TradeSmith. Appreciate that, and thank you very much, everybody, for coming. Don't forget, also next week, we've got one of these presentations on the stock market because I think we're at a pretty big inflection point there, and it's presenting us. I don't want to do these webinars like this unless there's something exciting going on. If it's just the same old, I don't want to waste your time. But I think this is a big opportunity. I think the stock market's going to be a big opportunity as well. So hopefully we will see you next week. Thanks very much, everybody. Talk to you later.